Hi, everybody. This is Pete Carmasino with Chaikin Analytics. We actually have an advisor product called PortfolioWise. And I'm just going to do a quick overview. I'm not going to get into the details, but I do want to show one thing um, where we can compare our methodology against current models out there in the marketplace, right? And some of these are available through the issuers and things of that nature. The one I'm going to work on today is a simple Vanguard one. It's an all equity one using their core series. And I'm going to show you just a few things on here, right? So our ETF rating is based off of our underlying stock rating, which we take a 20 fundamental factor type model, and we look at the underlying uh, equities that make up the ETF, the portfolio of the ETF. We've rolled that up into our ETF rating, and half of that rating, or better than half of that rating, is about a technical rating. So we're trying to look at the trend of the ETF of the portfolio, and the other one is we're compiling the overall ratings of the underlying equities right inside the ETF. So I hope that makes sense. If it doesn't, we're going to go into some further detail in other videos. So here I've got about 37 portfolios built. As you can imagine, I build multiple portfolios for all of our users and sort of like demoing and things of that nature. So I built one here at the beginning of Q1. And it's very simple. I just took the top 10, right, of our ETF groups, right? So we have ETF groups. We've got, I think, 22 or 23 groups of ETFs. And you can see their exposure, right? I had small cap value, consumer discretionary, some info tech, a mid cap blend, small cap growth, financial industrials. As you can see, those particular ideas have actually done well. So in roughly about a 3-month time frame, we're getting closer to 3 months. We're a few weeks away. It's up over 23%, right? Excellent. That's great. But what the most important part about this is that it is fund family agnostic. You're not looking at one particular fund family. So let me do this. I'm going to take a deep dive into our diagnostic tool. Right, one click of the button tells me I know I'm 100% equities already. It gives me some quick metrics. I can see my average expense ratio is 31 basis points, 0.31. Shows me performance or so. That sets to a 1 year. So I'll reset that to a 3-month real quick. And then it gives me the weighted performance, which ones we're doing the best. So you can look at this AVUV in that 3 months has done over 30%. It's pretty interesting. We know small caps have been outperforming, and it just tells me the focus where it's at. I just went completely evenly weighted. I didn't do anything fancy. I didn't overweight or underweight anything, right? So I went completely straight down the line and equal weight. So now what can I do with this? I can actually compare this to another portfolio. So I'm going to slide down to the Vanguard Core Series All Equity ETF model, right? It only consists of 2 ETFs, but it's, I mean, fully diversified. It's an excellent, I'm sure you can see. In my model, where we basically took all of our bullish ETFs, the number one ETFs in the category, I had to be bullish as well. I've got an equity exposure of 3,100 companies through 10 ETFs. In just 2 ETFs, it's even more diversified on the Vanguard side, 3776, which is excellent, right? So if I start to look at what's going on there, they've got a much lower expense ratio of 8 basis points, no doubt, right? 3-month return, however, is slightly lagging. So you can see where we are. We both models kind of dipped slightly at the beginning of that 3-month time frame, sort of stayed sideways, and then it started to really see better performance over the course of the beginning of this year. So you can see where we ended up. Dividends received on my side, on PortfolioWise's side, is about 2,900. So this has less of a dividend, but we can just see where the performance lied, which ones were performing, how they were performing, and then you're looking at exposure. This is what I really like, the sector exposure here. So look at the difference. We actually had a lot more financials, so we were 20% versus 7. They had about even on energy. They had more communications, than our fund family agnostic model. And this is not to say Vanguard's models, no, it's a great model. What I'm saying is there's a better way to maybe put this model together if you're going to be in all equities and using a methodology that doesn't have anything to do with a conflict of interest, right? We're just looking at rated ETFs based on our rating and our methodology. So look at, they had a little bit more healthcare, and info tech was pretty much even. We overweighted. Again, I didn't overweight it. That's just the way that the ETFs played out, right? And our top 10 bullish ones started out this particular quarter. So when I look at the side-by-side comparison, it's very simple to understand, easy to use. And if I wanted to, I can print this out for a client. It's a full report. You can put your logo on it, all your communication, your phone number, obviously your email and things of that nature. So it's white labeled for you. And then you can show if somebody came in with one model, whatever that model is. This one I'm using is the Vanguard one, versus a better way to build it, right? A way to put your model, your expertise together and actually dive deep into the model and see where the differences lie. In this particular case, we had some small differences that made up a very big difference. So a lot of us as advisors, I was an advisor for many years, what we tend to do is kind of worry about expense ratio, as we should. But in this case, you're talking about a much larger expense ratio type model, but actually delivered. So I'm going to end that here. We're at PortfolioWise.com. Come take a look. Again, PortfolioWise.com.